On this episode, we talk to Kal Woodley from Grand Union Financial. We discuss what Grand Union does, building a brokerage firm, and advice for other brokers in the industry, and much, much more. Now, let's spend 30 minutes in finance.
Hi, I'm Kal Woodley. I'm the company director and firm principal of Grand Union Financial.
Perfect. And thanks for coming on, Kal. Really appreciate your time this morning. Just for everybody listening, can you give us a little bit of a background as to how you got into the industry and sort of started Grand Union?
It's a bit of a strange one, actually, because I'm probably one of those professionals that decided to change tack mid-career. I was actually in manufacturing, automotive manufacturing,
Wow.
in engineering, and I got into that as soon as I graduated. And I was lucky to join a company that actually took me all over the world. So I lived in Italy for about 5 years. I lived in Japan. I lived in Morocco for 2 years, India, and then various other different countries in Europe, Poland, Czech, Spain. So I was really lucky to get onto, let's call it a graduate scheme that was doing what I loved at the time in terms of career. Really helped me prosper as a young engineer. But I was lucky that it took me all over the world, and I learned a lot of experience, met different cultures, got to integrate with different cultural teams, and yeah, got to see the world whilst I was at it. So it was, it was heaven. It was brilliant. It was probably what any young graduate would want. It was a dream job. And then unfortunately, I was in Italy at the time, and it was 2008, and it was of course the financial crisis that a lot of us still remember today. And my whole world came crashing down. All my international projects were grinded to a halt. And in Italy, they were doing things called, they call it cassette integrazioni, where it's essentially like their version of a layoff. But for me, I was just twiddling my thumbs every day. And I thought, well, you know what? I've had a good stint. I think this is the best time for me to leave. So I returned back to the UK. I got another engineering job in the automotive. Things weren't really picking up, and I actually became a father as soon as I came back to the UK. I found an amazing partner, and I then decided, do you know what? Sitting in the wind tunnels or doing diagnostics Saturday, Sunday, 10:30 p.m. to 11:30 p.m. is probably no way for a father to an upcoming father or to be father to be acting or have as a constraint. So I decided to self-study on my CMAP exams, and found a local brokerage who would take me in under their wing. And I chose financing because, a little bit like engineering, there are puzzles. They can become more and more complex. And I decided, you know what, I can put my skills to good use, and okay, I can start off with mortgages and move into more challenging aspects like development finance, which I enjoy and I love.
Well, that is, yeah, first news story for me, which is always interesting here, and something it is that's quite a sort of shift. I always find it strange or kind of fascinating when anyone sort of takes that leap to sort of change career, because it is it's a whole new thing starting from the bottom again. Well, not quite, because you're probably obviously pretty
Well,
intelligent anyway, so.
it, it's it's scary. Don't get me wrong. Everyone, I mean, I did a lot of, financing wasn't the only career path I was looking at. I was looking at all different other various types. But what I learned about pursuing a career in financing is that yes, it doesn't. The majority of brokerages out there, you do go self-employed. So that itself was a huge mental leap, if you like.
Yeah.
That was really hard to sort of get around, especially when, you know, I've been on the payroll for X amount of years and traveling the world. It was harsh to, it wasn't harsh, it was hard to give up that type of lifeline, if you like.
Yeah, the security
Um,
of it all.
exactly. But I liked the financing and getting into debt finance and brokerage side because I also saw that it's a career that not only are you self-employed, but you can do until, you know, you're well into retirement. You know, you still get wealth managers and that are, you know, well beyond retirement age, and they're still doing wealth management at the same time. So I thought to myself, hey, do you know what? I could be self-employed. Um, I could be flexible around being a, you know, being a father. I can work my own hours, do what I want, travel when I want, and I can keep doing this job until I'm in my 60s or 70s even. So, you know, what's kind of not to like? And I just thought, as long as you can believe in yourself. And I think one of the things, if you are ever getting into this industry, and this is probably for anyone who's, you know, mid-career or starting off from entry level, is that, you know, you do get out of it what you put into it. And I think being self-employed helps you retain that hunger. And I think if you've still got the hunger, then you'll wake up every day with that drive. And it's nice to have that. There's the right level of, if you don't earn, then you don't put food on the table. And that drove me, you know, that thought of not being able to put food on the table or being able to pay for my mortgage really got me up in a positive way. You know, I relished the challenge. I didn't, you know, I wasn't thinking, oh my goodness, doom and gloom. I took it, I took it as a positive challenge, and I said, right, you know, that's it. I've got to trust my instincts. I've got to believe in myself. I've got to learn from others as well. That's really, really important. You know, when you come into this industry, don't just think, right, that's it, it's all on you. Feel free to, you know, I shadowed my principal at the time. I learned a lot from him. And then I decided to, you know, when the timing was right, I decided to say, right, do you know what? I think I know enough to know enough now. And I wanted to go off and start my own brokerage. And I got my direct FCA license, and here I am starting Grand Union Financial, and 2 years in the making, and we are going strong.
Yeah, so it's an interesting one. What made you sort of want to go down the route of the regulated side as opposed, was that what you were doing at your previous place?
I was with a brokerage that was under the AR of the open work model,
Okay,
and
yeah.
if anyone knows open work or doesn't, they're sort of like direct competitors. I would say SJP, St James's Place, and you know, the training that they offered was top notch. It was first class training. I have to admit, and how they were able to help and structure my learning was absolutely brilliant. So I do think, if you're starting off in this world, try and seek big networks who offer great academy training and routes and what have you, because you do need to learn from the best in terms of what's out there to harness the skills and maintain and upkeep that discipline.
Yeah.
Yeah. The brokerage I was working for, we were regulated. We did mortgages, buy-to-let HMOs, but then that's kind of where it stopped. And I approached the principal and I said, "Do you know what? I've done a couple of mortgages, I've done protection, and I've done buy to lets." And I thought, "Do you know what? I really want to get stuck into some of the complex other mechanisms." And I said, "I want to learn about commercial financing. I want to do development, I want to do bridging, I want to do all sorts." But unfortunately, they couldn't, of course, because they're PI, and what they were able to do was sort of governed by open work. So I decided, we struck a deal with open work, and I said, look, you know, I'll work with as an AR for someone else, another commercial brokerage, and I'll learn the ropes, and all my work will get signed off by the principal, which it did. And I actually decided, you know what, there's a whole new world out there in terms of commercial financing, not just the regulated side, but this is also quite exciting. And I, I don't, I don't want to sound big-headed or anything, but I slowly started to realize, well, I'm going to outgrow this place pretty soon. So it was only going to be a matter of time. And then 2020 came along. We were all sat at home doing nothing. My work completely dried up. And I thought, right, well, this is the best time to go and apply for my FCA license.
Yeah, a couple of months
I did
of nothing.
exactly. So yeah, well, their pipeline, you know, my application got approved within 3 months. You know, because
Wow.
I thought, well, you know, people are sitting at home doing nothing and they haven't got, you know, they're not out and about. So I had a couple of phone calls from the FCA, you know, managed to send through all the right documentation, all the casework, and hey presto, got my license. And then I realized, oh damn, I've just started a brokerage in 2020, probably the worst time to start a brokerage. It was, I was like, I'm going, but then it was actually quite handy, because then I flipped straight away to my first case that I completed in 2020 was a C-bills loan and an RLS loan. So I really,
Yeah,
I
perfect
got to
timing.
yeah, well, I got to grips with that pretty quickly, and then I started recruiting.
Yeah, so in terms of so it's just you. How long did it take then for you to get your first member of staff, or how have you actually structured your business? Is it based on are they members of staff, or are they ARs, or how have you sort of done that? And how many have you got at the moment?
So as of April 2023, we are 13 advisors,
Wow,
13 brokers. So that we started in March 2020. So just over 2 years, we're 13 advisors up.
that's pretty
And
impressive.
I've not put out posts. I've not put out recruitment posts. I've had some discussions with some recruiters, and some of those recruiters have brought me some people looking for, you know, elsewhere, but none of them have actually come off. How I've generally recruited is I've actually seen, well, 2020 was an interesting year. The amount of regulated or financial brokers that fell out of the market, i.e., they got released from their employment, was astounding. And I made contact with quite a lot of them, and only some of them came back to me. And I said to them, look, you know, we can't just, you know, I'm a broker just like you. We can't be one-trick ponies. We can't just be doing mortgages and protection and what have you. I mean, don't get me wrong, there are some people who make a great living off just doing that, and kudos to them. But I truly believe the role of a financial broker, financial advisor, is to master more than just mortgages and buy to lets. I think the world in terms of property is moving in different directions, where bridging and development is becoming more and more apparent now. So why not start learning those skills? And I said to them, look, you know, if you stick with me, I'll teach you how to learn all of these different aspects, all of these different areas of brokerage. I'll even tell you to do business finance, asset finance. I will give you the jack of all trades. I'll give you all the tools in the toolbox, and that will give you the ability to diversify your pipeline. It will give you the ability to pick and choose what cases you want to do and how you want to approach them, because a mortgage advisor will approach it purely from bricks and mortar. An asset broker will approach it purely from an asset point of view. So having that skill base where you can look at multiple avenues, multiple ways of solving the puzzle, is I think is key. And all of my advisors are self-employed. You know, we have a unique proposition on the market, and I've told a couple of recruiters about this proposition, and I think David, I've even told yourself about this proposition, haven't
Yeah,
I? And
yeah,
it's still the best on the market. I think it's fantastic. I don't want to kick and scream about it and post it all over LinkedIn or Facebook. That's not my style. Those who want to inquire, feel free to call me and I'll tell you all about it and what we do. But I think it's fair. It comes from a place where I was, struggling and, giving away quite a lot of your commission, even when you're struggling, it can cut you deep. So this proposition is there to treat all my advisors fairly. They're all treated the exact same. And there's no targets in this company. We work with each other. We're all one team. We're all self-employed. None of us are ARs. They're all directly grand unions. And we're just a great team, just a great laugh. And if someone's struggling, then you've got 12 other advisors that are going to try and crack it for you.
Yeah, because what would you say in terms of Grand Union's sort of main thing is, if you had to sort of break it down in percentages, is it sort of still property, sort of property finance?
I would say predominantly it's still property finance, and that's only because the advisors I've got are CMAP advisors that I've taken, molded, and shown them how to use asset financing or business loans. So we are, I would say, percentage wise, we're probably more leaning towards the property financing, but we're starting to change that now. I'm starting to see a couple of advisors, doing some invoice financing facilities with an asset finance case, and then a development coming in later on. So it's working. People are diversifying their revenue stream, which is fantastic to see.
Yeah, and I guess when a borrower comes to one of you guys and you have that knowledge, you can probably you can work out what the actual best solution is, rather than tailor fitting the client to your solution. You can tailor fit your solution to them, and that seems to be, I think a real bonus when it comes to any of sort of broker. With the sort of business itself, what are your sort of end goals with it? Where do you see it sort of going? Do you want to just keep on adding, or is there a sort of goal that you've got in mind that you're working towards?
There is we've got a 5-year plan, and I want to get the advisor numbers up to from 13 to about 30 over the span of 5 years. And I may say that that's quite conservative thinking. People may think, you know what, you can do that quite easily, but it's not as easy as you think, because the type of advisors that I want to help must be an advisor that can walk into a room and say, I'm a finance broker and I can solve your problem with any number of tools that I've got. And for those who are, let's say, seasoned mortgage brokers, it's quite hard for them to snap out of trying to solve everything with a mortgage, or trying to take on inquiries that don't involve a mortgage. They sort of, if you shy away from that, someone wants to buy a haulage truck, for example, then there's numerous lenders out there. But if you shy away from something like that inquiry, then it's like, well, we're not that type of brokerage for you. You're not utilizing what we can offer. Where I want to take this, I do want to grow the brokerage to a certain size, 30 odd advisors. The line of management is flat. It's the advisors and just me, and that's it. There's no bureaucracy. It's just me. I'm an advisor too. I've got my day-to-day cases. I love to get stuck in and help my own clients. So I don't just sit there as a lot of principals do and just do nothing and watch the pound signs rolling in. I actually have my own clients. I get stuck in. I go to shows. I go to exhibitions. I do my research on lenders, and I try and stay as cutting edge as I can, and I try and learn as much as possible, because I still feel that, as well as being a principal, I'm still not the 100% best advisor that I want to be. I want to keep pursuing that, and I still want to be the best. There's a lot to do. There's a long way to go, and there's a lot of people that I can still learn from, and I can pass all that knowledge on down to my team.
Yes, it is. I guess with everything, there's all new lenders coming in, new products being made, so it's a continuous sort of learning thing. And from your own sort of deals, what is your sort of favorite deal to get done in terms of obviously looking at it from a couple of angles here? One in terms of the ones maybe with the sort of better return, and then the ones that get done quickly. And we'll come on to sort of speed in a second on some other things. But have you got any type of business that you really like when someone comes in sort of and you go, okay, this is going to be nice and easy, that you sort of specialize in?
Right. So I would say I'm a specialist development finance broker. I love development financing, whether it be refurb or ground up. And I go the extra mile where I actually build the appraisal for my clients. It's a service that I've started to offer some of the seasoned developers. And I love that. I enjoy building the business case. It's no different from when I used to work in manufacturing, where I love building the business case and pulling together the complete report to be able to present it to one, the client, and two, the lenders that will look at it. So development finance is, in terms of puzzles, is at debt level is probably the most complex you can get. And I say at debt level because, of course, there are a lot more interesting mechanisms above. But I find it fascinating. I love it. I enjoy it. It can be frustrating because sometimes it's a hit and miss. A lot of inquiries do end up going nowhere. So the completion rates, not as high as, say, standard mortgages. But I thoroughly enjoy development finance, and I specialize in that. And I think you get a lot of people that go to all these online tools that you pop in the GDV or the sales price and what have you, and it calculates, and then it just spits out lenders to go to. And I just think that that's not the true art of brokerage. Before, when a case comes in, and David, I know you've been on the receiving end of this. Before a case comes in, I already know who I'm going to start placing it with. I pick up the phone, I call the underwriters, or I call the contacts. I warm them up to it. I check to see if some of the sticking points can be overcome before the client even wastes time and money. So I
Yeah.
enjoy that. In terms of the quickest areas to broker, I think asset finance brokers laugh at a lot of us mortgage brokers. They laugh at us because I've done a couple of not a couple, I've done quite a lot of asset finance deals, and the speed in which these deals can be brokered is within a day, within 2 days, if you get all the paperwork aligned, and if it's a standard commodity that's known. So, for example, if you're out there and you want to buy a haulage Scania truck, chances are is every asset finance lender that's into the transport industry knows exactly how much that truck is worth, what it is, the spec. They've got it all registered, all the data's there. And you just call them up, say you want to brokerage this, fill out the paperwork, send it over. Someone comes over to inspect it, or maybe they don't need to inspect it in some lenders, and it can be done there and then on the day. And for a mortgage broker, that's like, what? How is that
Yeah.
even possible? But it happens. It happens. Completion can be done within hours in some cases, depending on the right case and the right commodity.
Yes, I hear the same with sort of just normal business loans and that kind of thing. And the returns on some of those is for broker commission is a little bit crazy at times from some of the stories I've been told for how quick it is when you compare it to the amount of hours.
It's so funny, David, because there's a couple of lenders I know, and let's say if you were doing £100,000 mortgage with that lender, the commission will be, I don't know, point I don't know, 4.5 or 5.5. If you were to do an asset finance deal with that same lender, different department but same lender, and it was £100,000 asset finance deal, It could go up to 1, 2, sometimes even 3%. I've seen some brokers do. So
Yeah,
it's
and that's done
you
in a day
know,
or two
and it's
in
done in a
comparison
day
to a
or
month or
two.
two or a couple 3 months. Yeah.
Exactly. So you can have a mortgage that pays you 0.34445 or 55. That takes you 6 weeks minimum to get. Or you could do an asset finance deal that takes you 3 hours to do and get paid 3%. And that's, I see that in front of me, and I shake my head. I don't know how one policy is okay for the others, and for mortgage brokers who are regulated and follow rules, it's a completely different pay structure, in my opinion.
Yeah, it seems I guess, yeah, it's the sort of interest levels, and I would imagine with normal mortgages, the competition is absolutely insane. So they can't be paying off huge fees because their margins are pretty tight.
Well, it's a strange one. I mean, you've got so many banks now, apart from the digital banks, but you've got a lot of standard banks that are closing branches. They're closing branches. It's part of their cost saving models. And the average client needs to call in to talk to a BDM, or as I see it in front of me, the banks are leaning on the brokerage network a lot more now. More so than ever. I honestly think if the brokers weren't there and they were gone tomorrow, some of these banks would feel it. And
mm,
we're lent upon so much, and because now there are so many mortgage brokers, um, the remuneration has just become more and more watered down, and it's become a saturated market. In my opinion, in terms of brokerage, don't get me wrong, there are not enough brokers in this country to service, but those that are there, someone has decided, you know what, we'll close our branch as a bank. We'll pay these brokers out, and X amount of percentage, and it still keeps our costs lower than actually having a branch itself. And that's, I only assume that's where probably some of the decision making has been stemming from. But yeah, it's like as I said earlier, I don't think you can make a good living just doing mortgages anymore. But if you do, then chances are is you're pumping out 20, 20 applications on average a week, depending on geographical location. And I don't think that's any way to really make a living, because then you don't have the chance to learn other new areas of brokerage. You're constant conveyor belt. And yeah, it's interesting. Some like it, some don't.
yeah, it seems like a tough business. And talking of difficulties and things that are tough, is obviously with the current sort of slight wobble in the market and the nervousness is out there. How's that sort of impacted you guys, or has it?
No, it's not, and that's the beauty of what we're doing, because 20 again, going back to 2020, we I think our mortgages, or the amount of mortgages we did, was absolutely, I think it was in single digits for that whole year. But the amount of business loans, RLS loan, revolving credit facilities was through the roof. And we were really busy, but we were helping businesses, we were helping individuals, so we were still able to get stuck into it. And we've carried that mentality all the way through to even today, where we try not to get too involved or too stuck in just into mortgages, because then you become a mortgage brokerage and then you become industry dependent. And just like as of April 2023, when you got the Bank of England rates that's just gone up to 4.25, and we've had that huge shock in jump in interest rate and inflation. When you see the mortgage market being hit, watch all the mortgage brokers sort of sit there, twiddle their thumbs, and even some of them go into redundancy. So thankfully, we've not been hit by that, because we're getting stuck into development. We've still got loads of business loans going through. We've got asset finance. I've got one broker who's in the medical industry, and he's just, that regardless of the property market going up or down, people still need to buy MRI machines, for example. So he's stuck into that. So no, and that's again, that's the my belief of diversifying yourself can make you industry proof, and that's why I'm trying to get to. That's what I'm trying to teach other brokers. And thankfully, no one's had to call me in and say, "Hey, Cal, can't do this anymore." Yeah, we've seen less mortgages, but then I've seen a lot more other things coming through.
No, yeah, which is I think that's great to hear, because we've heard some sort of stories of people that are very much buy to let sort of brokers, and they're having a tough time. Just things that the affordability and everything is making things very difficult. I'm conscious of the time, and obviously I know we're probably going to have you on a few times, hopefully, if you want to come back on, that is, to discuss more, because I've got tons more questions, and there's loads more sort of little bits of the market that'd be good to have a chat about. But is there anything you'd specifically like to sort of cover off before we sort of start wrapping up?
I would just look. You mentioned about that buy-to-let brokerage, and they're having a tough time. I do strongly believe one of the key things you have to do as an advisor, as a broker, is invest in yourself. Really, really invest in yourself, and that can mean learning different areas of brokerage. They're in this position because the market's gone down. But for those who are in the property market, no, there is always a cycle. There's always a cycle. We know it's going to happen, unfortunately. But that is, history has taught us that the property market takes dips. So if that is the case, then why not, diversify your own skill set, learn something else completely different, and become, I wouldn't say 100%, bulletproof, recession proof on industries, but at least give yourself a good fighting chance to become resistant to the property dips.
Yeah.
I do urge any principals out there, or any advisors out there, to look, if you're happy with doing what you're doing, fine, but complacency in this game is costly. Not now, but it will be when this boat starts to sink. But when the boat starts to sink, it could be either too late, or you're sinking with everybody else. So, have a look. If you want to reach out to me, I'm thinking of branching out and in other ways as well, on how I can help other advisors in other brokerages to learn different new skill sets. I think it's key. I think it's relevant towards the market today as well, given that property is becoming more and more complex. The buyers are becoming more and more complex.
Yeah.
So I invest in yourself, and I do take it. Invest in yourself, and don't try not to become complacent.
No, yeah, I think,
That's
yeah, it is. And using your sort of boat analogy, I guess that sort of thing is you're just, over time, as you're increasing your skills, you're building that bucket up, or you're creating a bigger and bigger bucket that you can bail out the water just a little bit quicker than everyone else.
Well, that's it. You need to be able to stay afloat. You got one bucket that's a mortgage, and if you have multiple buckets, you'll be able to hopefully stay afloat for a lot longer.
Yeah.
I like that analogy. I think I'll use that again in the future.
It's all yours. But yeah, so where can people find you? And obviously, if they want to get in touch with you directly, or one of your ARs, where's the best place to go? Or not
Okay,
ARs?
well, again, we don't do ARs.
No, yeah,
All of the
take that back.
advice. All right, all of the advisors that work for us are direct under our name, our brand. I won't do ARs for various reasons, which we won't get onto now. But if they want to reach out to me, then look, contact any one of my advisors, or contact me on the website. or we are having our website revamped as well, by the way. So that'll be coming through probably about May 2023. But just reach out to me, and if you want to have a quick phone call, just have a quick phone call. It's not gonna hurt. I'm not one of these principals that will not entertain a conversation if you have no interest in joining us. I don't come from that type of background. I've come from manufacturing engineering. I like helping other people, even if it's not in my interest. So if you want to reach out, just reach out.
No, appreciate that. And thanks ever so much for your time, Kal. Like I said, there is tons of other questions I've got that we'll have to jump to on the next time. Things like sort of how you actually go about getting your business, how you advertise it, what sort of education that you recommend people getting, if any, sort of formal education, all those sort of bits and pieces. But for now, we'll leave it there, as it is only 30 minutes in finance rather than an hour. So thanks ever so much for your time, Kal, and we'll pick it up next time.
No worries, David. Thanks for having me on, man.